Okay, this question on page 35 requires us to prepare a statement of profit or loss. Okay, so what we need to do first is that they give us the starting assets and liabilities and the ending assets and liabilities. Okay, so we're going to find the beginning capital first, okay, which is beginning assets minus beginning liabilities. Using all these numbers here, just take the beginning assets, okay, minus my beginning liabilities. You should get the beginning capital of 149,397. Okay, and they also gave us additional information. Okay, three additional information. Okay, for the first one, they said that during the year, Sandy took goods $5,000 for personal use. Okay, hence I know that the transaction is debit drawings, credit inventory. Okay, the question didn't mention anything whether the transaction was recorded or not. Okay, hence we assume, okay, or it is implied that the transaction is actually recorded. Okay, hence I don't need to adjust the figures up here anymore. Okay, if the transaction has been recorded, it means that the inventory value 5,000 has been taken into account before they got 13024. Okay, that means this has already been adjusted for already. Okay, so we don't need to care about inventory. Okay, because it has already been adjusted. Okay, as for drawings, right? Okay, remember later we need to take into account drawings of 5,000 when we're doing the statement of profit or loss. Okay, so drawings we need to account for it because these accounts above are only for A and L. Okay, drawings have not been taken into account here. Okay, next one, during the year, owner invested $2,000 into the business. Okay, so the journal entry will be debit cash at bank, credit capital. Okay, more specifically is additional capital. Okay, now they did not say anything whether the transaction was recorded. Correct? So what do we assume? We assume that the transaction was already recorded. Okay, what this implies is that this $2,000, okay, has been taken into account, okay, and adjusted for to derive $90,000. In other words, this $90,000 has already adjusted for 2,000. Okay, they have gotten this value of $2,000 and adjusted it to get 90,000. Okay, therefore, we don't need to care about cash at bank anymore because it has already been recorded and adjusted for, okay, to derive 90,000. But what we need to account for is my additional capital. Okay, because above accounts are only for A and L. Okay, capital we need to take into account later when we're doing our statement of profit or loss. Okay, the last one. Okay, this is actually the most challenging additional information. Okay, they say that a new vehicle was purchased during the year using Sandy's personal fund. Okay, look at what I highlighted, personal fund. Okay, the depreciation was $5,000 for the year ended 31st December. Okay, I know that if the vehicle was purchased using Sandy's personal fund, the transaction, okay, or the journal entry should be debit motor vehicle, credit capital, right? Okay, now the additional information here did not say anything, okay, whether the transaction has been recorded, okay, but because they didn't say anything, it is implied that the transaction has been recorded. Okay, in other words, the motor vehicle here, okay, has already been adjusted for in 74,000. This 74,000 has already taken into account the motor vehicle that was contributed. Okay, I repeat again, this 74,000 has already taken into account the motor vehicle that was contributed. Okay, therefore, I don't need to adjust for this motor vehicle anymore up here. Okay, he has already been adjusted for. Okay, then the question lies, how do we calculate the additional capital? Okay, because we need the additional capital when we are doing our statement of profit or loss. We need an additional capital here. Okay, so how do we calculate out this additional capital? Okay, if you go and look at your theory booklet, okay, there's actually this equation here on page 34. Okay, page 34, below the last part. Okay, I know a lot of you will forget this part. Okay, page 34, the last part here. Okay, it says that depreciation equals to net book value as at the beginning of the period. Okay, which is the beginning net book value. Okay, plus the cost of additional NCA bought during the period. That means the new NCA that is bought minus the ending net book value. Okay, which if you manipulate the formula a little bit, okay, it would actually make sense to you. Okay, why do I say so? Okay, look at this equation over here. The difference, okay, between my beginning net book value and ending net book value is because of depreciation, right? The value drops every year because of depreciation. Depreciation is like the loss in value of the non-current assets. So the only difference why the beginning, okay, and the ending would change is because of depreciation. Agree? Okay, depreciation causes the value of my NCA to drop. So beginning minus depreciation will equals to the ending net book value. Okay, however, in this case, there is a additional NCA that is purchased. Okay, therefore, this new equation lies that the beginning net book value, if there is additional NCA, we add it in, okay, minus the depreciation, it will give me my ending net book value. Okay, if I use this equation and apply it here, okay, my beginning net book value is $50,000. This is the net book value, so it has already taken into account accumulated depreciation. So 50,000, okay, plus additional NCA. I don't know what is this value, okay, which I am supposed to find out. Minus depreciation, question gives us $5,000. Okay, minus 5,000 equals to ending net book value, which is $74,000. Okay, so if you look at here, right, the net book value, actually by right, the value of the NCA should drop every year, right? 50,000, actually it should drop to below 50,000. But why in this case it increased to 74,000? It's actually because of the additional NCA. Okay, so if without the additional NCA, you will see that the value will actually drop. Okay, but because there's an additional NCA now, how do we calculate the additional NCA? 74,000 minus 50,000, okay, bring over, plus 5,000. Okay, so the additional NCA contributed in that year is $29,000, which is also equals to my additional capital. Okay, $29,000. Okay, $29,000. Okay, so the NCA that was purchased using her personal fund cost $29,000, which is also the additional capital contributed, okay, by Sandy. Okay, therefore, if I do up my statement of profit or loss, my ending capital is 180,274 from here. Beginning capital above value 149,397 here. Okay, less additional capital, I will take $2,000. $2,000 is from here. Okay, information number 2. Okay, as well as information number 3. my additional capital contributed $29,000. Okay, so 2,000 plus $29,000. These two are my additional capital. Add up to give me $31,000. Okay, add drawings. My drawings given in the question is $5,000. Okay, she took goods of $5,000 for personal use. Okay, therefore, just do a simple calculation, key into your calculator, and you should get this value as your profit for the year. Okay, thank you very much. Please see me if you need help.